I was able to engage with a larger pool of investors, oftentimes had more access to decision makers because there just was that ability to be able to meet.
Our vision is a holistic one based on the belief that the strength and competitiveness of our economy ultimately depends on giving everyone the opportunity to participate and contribute. Let's not leave anyone on the sidelines.
StartEngine is one of the leading equity crowdfunding platforms in the industry.
So there's another about $3.5 billion that essentially needs to come from the private sector, and a lot of that will come from entrepreneurs like the audience in this meeting. So there's that one big issue, demand issue.
Equity, as you all know, is dilutive, and it's at a valuation which is at today's valuation, which might be low for a company that's very early stage. And so if there's a way of avoiding the dilution of equity, that's always desirable.
So most of our startups that are raising from VC are also raising on Republic. And I think that's the incredible part of it, is that you can be raising from two different sources at the same time.
Well, hello and welcome to the Global Investment Summit. This is part 3 of a multi-series edition for the 2021 year. We're so excited to welcome all of you to this edition of the Global Investment Summit. So without further ado, let's dive right in. So as you can imagine, this entire year, we have been discussing different themes when it comes to global investment. Part 1, which was launched in the summer, was around future of funding, the wisdom of the crowd, where we talked about different ways entrepreneurs and influencers can raise capital with different opportunities, alternative investments, and really challenging the diversity of opportunity when it comes to being an entrepreneur in the tech space. Part 2, we dive down deep into this topic with the future of equity crowdfunding, because as many of you are currently aware, this is now an opportunity for many entrepreneurs to be able to raise from the crowd and get opportunities for investments by getting their family, friends, and consumers and customers to be able to invest in their platform. And now today, for part 3 of the edition, we're so excited to share information regarding the future of investment careers, the people shaping the investment landscape, where we're going to talk about influencers who are investors, private equity influencers, and talk about how do we get more individuals in the investment space so we can make sure that we get more capital and support and resources to a diverse set of people. And as we can imagine, there's many articles and information around the lack of diversity when it comes to capital support for rising entrepreneurs of all different backgrounds. But I think we need to talk about the pipeline of the people who are the decision makers also in this space. So we're really excited to dive into this topic today and cap up and finish off the multi-level series that we have for today. So with that said, I just wanted to give you guys a reminder that this program is powered by the Global Startup Ecosystem. There's more information about the Global Startup Ecosystem later on today, but as you can imagine, we are an organization that is preparing individuals for the digital age via our 3 iconic pillars, which is entrepreneurship, education, and employment, where we run numerous programs around the world to empower people and prepare them for the future, whether it's through our tech summits, our accelerators, or any type of program through our partner ecosystem. We are so proud of the work that we do in emerging markets and communities around the world. So a big shout out to Global Startup Ecosystem. And of course, you can find out more information about the GSC Global Investment Summit by checking the hashtag Global Investment Summit or going to our website to share more information, not only about the Global Investment Summit, but also all the programs that we host as an organization throughout the calendar year to our constituents. So we're really excited that you're able to join us for this edition of the program. Now, again, I just shared with you that we operate on 3 major pillars of empowerment when it comes to ecosystem and engagement. When you think about our entrepreneurship pillar, this is probably more of our popular ones. We own over 300 different brands of tech summits that we run around the world, whether it's a country tech summit, a regional program, or a topic of discussion like this one that we're discussing today, which is around investment. We are really, again, excited to share thought leadership and insight. You're going to be hearing from amazing speakers today regarding their thought leadership around this matter. And of course, during this pandemic, our employment pillar have taken making huge strides in engagement and huge demand as we prepare our constituents for remote work and digital careers. We're becoming a more and more digital society. Of course, we think about the transitions in technology and the transitions into society. This, again, was probably the largest remote work experiment in human history. So we're really proud of the work that we do to prepare people for digital careers and digital opportunities. And finally, education through our accelerator programs, whether it's our virtual accelerator programs on entrepreneurship or career accelerator programs or topic accelerator programs. These are the three pillars of ecosystem engagement that we pioneer and push forward every single day at GSC as an organization, but also as a partner to many other enablers within different respective ecosystems globally. So again, thank you for joining us for the work that we do in that matter. But with that said, I definitely want to give you guys a window into the work that we do. So I'm just going to play a quick clip about what we do at GSC so you can see it for yourself. I always love sharing videos and images of the work that we do at GSC globally. You saw images of work that we do in Haiti, Ghana, Nigeria, the United States, and more. And again, seeing is believing. So, of course, I know we're in a virtual experience this year, but please definitely go to globalstartupecosystem.com and sign up to be a community member so you can have access to pretty much the world through our programs that we host on a regular basis each and every day. So thank you for that. So with that said, I do want to also share a very important announcement that you can now invest in GSC. And I'm so excited to be able to share that we are now open for investment. If you go to globalstartupecosystem.com/invest. That is a great opportunity for you to be able to invest in GSC and be a part of our development and our scale as we continue to do the work that we do around the world. So with that said, I do want to again welcome all of you to the program. Again, this is a very important edition in the series. We're talking about the future of investment careers, people shaping the investment landscape. So we will be having our first keynote speaker join us in the next couple of minutes to share his thought leadership of what's happening in the investment landscape. And of course, we will have a very inspiring panel from influencers in the investment space sharing how they started their careers in investment and how they got their opportunities to be where they are today. So looking forward to that panel later on today. And of course, another huge shout out to our amazing lineup of speakers. We've had over 33 speakers speak on this year's virtual edition. And of course, we want to send a huge thank you to our partners. So with that said, today is going to be an action-packed agenda. We try to keep it as tight as possible. So of course, we're going to have back-to-back sessions with breaks where you during these breaks we'll obviously show you a window into other GSC programs that we do so that way you could continuously be a part of the GSC global community. But as speakers come on, I'm looking forward to sharing with you their thought leadership. And one of the most exciting workshops that we're going to have for today, a very brief 30-minute workshop where I will be spearheading, where I'll share how to raise $1 million for your startup on crowd equity platforms this year. And I'm actually going to be sharing parts of my journey raising capital, both publicly through a crowdfunding platform, but also privately, because many times when entrepreneurs are capital raising, is not just what you're doing in public, it's also all the private pitching and partnerships and dialogues, and how I've been able to close pretty much over 100 different partners, from the Googles to the IBMs to the Microsoft over the past couple of years. So I'll be sharing all those secrets and more later on today. So don't miss out. It's going to be a very exciting workshop. And I also will be taking live Q&A from the audience during this session. So feel free to just even start sending your questions now. The team is fielding those questions in prep for that workshop, because we've got a huge demand for this topic, where I'll be able to share all the insights you need to know about how to capital raise, especially during this environment. We have a very extremely unique environment. I know right now we're still in the throes of a pandemic. We're trying to find our new normal, but I will stress that this is an opportune time to be able to not only reassess the work that you do, whether it's your career, but also for those who are entrepreneurs, those who are thinking about starting a business or thinking about scaling your business in a unique way. This is also a unique time to do so. So I'm looking forward to sharing not only strategies and insights as to how to capital raise, but also how to really position your company, because we've actually been able to scale GSC and the work that we do to the nth degree, despite the pandemic. And I'm going to share both the highs of those lessons and the lows of those lessons. So just wanted to share that agenda layout with all of you today. And then finally, another huge shout out to some of our speakers who will be engaging with you all today. I'm really excited for the panel where they'll be sharing, again, their thought leadership and insights about how to get into these careers. So with that said, I want to now formally introduce myself. My name is Christine Tim. I'm the CEO and founder of the Global Startup Ecosystem, also known as GSC. And I am so excited to be your host today, to be able to engage you on this fundamental journey of these iconic speakers who will be joining you today. So with that, let me give you guys a window as to what you're in store for today, and then we'll kick it off with preliminary prep conversation. So thank you so much. There you have it. So with that, we're going to have our first speaker join us in the next couple of minutes. And right now, we're giving people time to pretty much get a great opportunity to network and engage. I'm going to be sharing some of the preliminary comments that's coming up right now from our audience. So please shout out where you're coming up, where you're coming in from. We'd love to give you a shout out on the platform. Why did you decide to join this summit? I know a lot of people are either looking for investments, are excited to learn more about these opportunities. So right now, we're just giving a community shout out to everyone who's on the line viewing us today and joining us for part 3 of the Global Investment Summit. So I want to give a huge shout out and greetings again. Share where you're calling in from. GSC, we're a global platform, so we have influencers from all over the world. So we're just giving some rounded shout outs to everyone. So thank you so much for joining us. All who's on the call, who's joining us today, please give us, just share with us who you are and what you're joining in from and why you decided to join us. So with that said, I do want to share that there's three things that we want for you to take away from this program today. One is redefine how you look at capital raising or resources for your company. One thing that we stress a lot at GSC is that, when you're building your company and scaling your enterprise, one of the most notorious things you need to have a vision and plan around is how do you get access to resources. One thing I will be sharing on later on is that, I divide up the resources that we need at our organization from funding to partnership resources to client pipeline resources. So anything from, registering to different ecosystem platforms. One thing that we did a phenomenally good job at GSC is registering for multiple different platforms to get the word out there about our company. So whether that's event platforms, whether that's press platforms, whether it's SME databases, that's something that we've shared many times, really redefining how you look at how you position your company for access to opportunity. The second thing that we definitely want you to take away from this series when it comes to investment and preparing your company for opportunity and resources is really aggregating the story and narrative about your company in different formats, right? And so we have at GSC a pitch deck where it talks hardcore about our numbers and our traction, but we also have our storyline pitch deck where we talk about our journey. How did we actually start from the paper ideas to how we scaled? And keep in mind, in our storyline, we talk about the lows as well. One thing that I always stress is not just transparency about the high points as your entrepreneurship career goes, but also the very low points, because it shows resilience. I know in my tenure as an entrepreneur running multiple companies, I've had more issues and roadblocks than successes. And so it's gotten me to become more fluid, more thoughtful about, my approach. And one thing that I will say when it comes to approach, a lot of times we focus so much in the approach to get to our end goal that we lose out on the opportunity of just getting to the end goal. So for example, a lot of entrepreneurs stress on the fact that they think they need to raise capital via venture capital in order to be a successful company. Again, this is about you overthinking the approach. I learned probably the hard way that if I want to scale my company to be able to be the go-to platform to launch these tech summit programs, empowering communities of color around the world, if VC is an option, what are other alternatives to scaling? Whether that's building more contract agreements, whether that's crowdfunding like what we're doing this year, whether that's partnership proposals. I have this thought leadership exercise that I do where whatever goal that I want to do, I think of the top 3 goals I want to accomplish for the year. And I list out 100 different ways to accomplish that goal. I'm going to repeat that again. I think of the top 3 goals that I want to accomplish for the year. And I write out 100 different ways to accomplish that goal. And I would tell you right now, sometimes I get exhausted around, like, let's say number 34, right? Because you think you have creative ways of accomplishing a goal until you actually go through the exercise. And then by that point, I'm like, you know what? I need to talk to some people and ask other people how they've done it. And then I get another 20 more. Now I'm at the 55th reason. And then I keep talking to other people, or I talk to my staff, or I talk to my team, or I watch videos, or I watch thought leadership, or I look back on things that I've done that I've learned from. And then I get to my 100 different ways of accomplishing that goal, right? So I challenge all of you today, if there's anything that you take away from some of the thought leadership from this series content, is really thinking about your top 3 goals for building and scaling your company this year, and literally write down, whether you use a spreadsheet, a Word document, or you write it down, 100 different ways to accomplish that goal. I promise you will not regret it. It's something that will really challenge your thinking, and it will do either one or two things: either help you get to your goal faster, or second, help you identify weaknesses as to why you're not able to accomplish that goal, because you're realizing, hey, why can't I get to 100 different reasons? Maybe I need an expert in this field, or maybe I need to, go back to the drawing board, or maybe I need to talk to certain people. It really is an amazing exercise. And the last thing I will say is motivate yourself to go through it even when you're hitting roadblocks, right? One thing that I've been notorious with sharing in terms of my journey of building not only GSC, but also the summit programs that we do around the world, is sharing that you will hit roadblocks. And it's so easy to be motivated when things are going well. I challenge you to be just as energetic, just as powerful, just as dynamic when things are also going wrong, because it challenges you to really think about what is more important than the sentiment that you're feeling right now, and how do you go for it. So I'm pleased to share that, look, I've been through it and I'm still going through it. But one thing that I always remind myself is how I feel after I accomplish that major milestone goal. So for those of you who are young entrepreneurs, I can say right now, when I was in college, when overwhelmed with work, I say, wow, when I graduated, I'm like, I thought college was difficult. Now I'm at my first job. And then, as you progress, you start thinking of all the milestones in your life that you in the moment was so overwhelmed. And you think about that moment after you get past that milestone, and you remind yourself that there's always that next chapter where you will cross that milestone, whatever. I don't know who needs to hear it right now, but if you're going through a milestone hurdle right now, I promise you will get past it. Just make sure to think about what you will feel on the other side and the learnings and lessons you have at the end of that. So wanted to share that insight with all of you, and be able to share from my heart to yours about my excitement in learning these things throughout my career journey, and also more specifically my entrepreneurial journey with all of you. With that said, I know we still have a couple more minutes here on the break before our first speaker comes up for their thought leadership. So I wanted to give you a quick window into 2 quick programs that we hosted earlier this year to really, again, this summit at Global Investment Summit is all around pioneering and diversifying access to resources, capital, and people and places at the right place at the right time. And other diversity programs that we've been doing to either empower women or minorities have taken place this year. So I'm going to start with the Her Future Summit. It's one of my favorite programs that we host every single year to empower women from all around the world. So take a look at this experience clip with the Afro Future Summit, and then we're going to dive right into the Her Future Summit.
Strengthening communities of color is something P&G cares about. It's a key element of our commitment we have made to serve as both a force for good and a force for growth around the world.
Economic development and equity and inclusion. We can use the exact same definition to define what we want or what we are intentional about with respect to both.
That systemically create a gap between career advancement and fulfillment of individuals of the same abilities, but different skin colors.
And in terms of funding, the gap is even bigger. It's like 20 or 30 times the amount of capital that goes to non-Black, non-Latino founders in the U.S.
Wanted to share that with you all because, again, this was one of the programs that we hosted today to empower Black professionals, again, in the digital space. And so hopefully that was engaging for you to see some of the work that we do across different ecosystems on a regular basis. With that said, I do now want to transition to another quick experience clip to share with you before showing you a window into Her Future Summit, and then we'll introduce our first speaker. So take a look at this experience.
But this world, as big as it is, one person can be the tipping scale to really create a domino effect that no one ever seen coming. I would like to remind people, there's going to be a lot of people that's going to judge you and tell you you're too naive.
There you have it. That's just, a window into just like our passion and our energy when it comes to the work that we do. And I'll give you one more final clip for the break. And this is more around the work that we do for our female pioneers around the world through our Her Future program.
And as a woman, I love the fact that it is so objective in terms of, it's the numbers. So always about the scoreboard. I'm selling more things. I'm being more successful. And all the gray and the black and white is very clear there in terms of your numbers.
Now, if you know me, you know about my 313, you know about my book, Ditch the Act. And today I'm going to take little snippets and parts to make sure that you know how to best position yourself as a female and also as a male for all you males out there, but this is for the ladies, how to pitch for your career.
And whether you're following along now or you plan to begin your search later, what you will do is open a new browser tab on your device. This way, you have your job search tab open in one tab and your tracker sheet, we just spoke about the tracker sheet, open in Google Sheets in your second tab. This way you can go back and forth.
Catering, tutoring, financial, and many more to flourish during the pandemic, while traditional brick and mortar establishments have struggled to survive.
I want you to know, don't give up on yourself. There are people out here like all of us who want to bring you in. We just need to know who you are, and so we can leverage your superpowers to help benefit our company.
There is no force equal to a woman determined to rise. I am powerful, and together we are unstoppable because our girls, our global girls, are our assets.
Amazing. So that's one of our programs here at GSC. And so I wanted to give you guys a window into those programs. With that said, again, this has been a very unique year for us to galvanize 33 speakers, to be exact, for this year's edition of the GSC Global Investment Summit. We worked with a series of different partners for this initiative, and I'm so incredibly grateful to all of our partners who got the word out there about this opportunity. For those of you who are registered, you will be getting an email at the end of this program with access to credits to accelerate your businesses from AWS, IBM Cloud, SendGrid, Google, AWS, and HubSpot at the end of this program. So definitely stick tight for those of you who are registered via LinkedIn or Eventbrite or any of our community channels. We look forward to sharing those resources with you. For those of you who are joining us for the first time via social media, feel free to just tag us on social media if you haven't registered, and we'll be able to get you on the email list to be able to get access to those free credits. And again, at GSC, we serve to empower our influencers across our ecosystem. So a huge, huge thank you and a shout out to our partners for being there for us. I want to take a little quick walk down memory lane, because last year when we launched the Global Investment Summit in 2020 during the heart of the pandemic, our first theme was around accelerating people into the digital age. And we had influencers in the investment space talk about their journey and ways that we could accelerate people in this time. And how do we invest in people? I think a lot of times we don't talk enough about how do we invest in our young people? How do we invest in our communities? So that way we're preparing them for what's next, right? And so as we, evolved into building on this series, I'm very proud to share that this year, because of demand, we were able to scale out the series into 3 parts. So instead of having an intense 3-day summit, we broke it down once per month, where we talked about different topics in the investment ecosystem and how we can empower people at across different emerging communities. And we talked about each theme for each part of the series. So hopefully you enjoy this. Again, for those who registered for this program, you'll get access to those videos and information and details and ways for you to stay a part of this global investment community. And again, as a reminder, we are proud as an organization to power this initiative and this program, again, in its 2nd year of edition. And I just wanted to share a screenshot, because I think a lot of times in this environment, a lot of people tend to say, yes, we have thousands of registrants. The proof is in the pudding. Right here, you see a screenshot of our LinkedIn community of over 15,000 people who not only registered to be a part of this year's series, but will be joining us as well, hopefully for 2022. So we're really excited about the community that we brought together, and we do our best through our newsletters to share updates and insights and opportunities for those of you who registered, again, to be a part of the community and get access to more free resources on a regular basis. So with that, when you think about part 2, we had the feature of equity crowdfunding, where we had speakers go to our YouTube channel so you could see these speakers that we hosted last month, where we had literally the players from the top ladies and gentlemen, crowd equity platforms speak at this summit program. So from Republic, WeFunder, Start Engine, EquityNet, and Seed Invest, these are part of the top 10 crowd equity platforms. All of them spoke at our summit. So as you know, at GSC, we have access to some of the most dynamic and most thought leaders, powerful speakers in the ecosystem. So I'm really proud that we have them speak. And so GSC, please share links to those YouTube clips on the chat feed. And each one of them shared how you can actually capital raise. And we do have an initiative at GSC where we're helping individuals crowdfund and raise capital for their business. So if you registered, you will get, again, an email on the next webinar, private webinar, to help you on your journey to capital raising for your business. So we're really excited about that opportunity for our constituents. So this was, again, the part 2 series speakers who spoke at that program. So of course, when I think about just in general, some of the speakers that we've had work with us in this endeavor, when we shared with them our leadership and our thought process with this, it was just a no-brainer, right? Just being able to join us and be a part of our pretty much our goal of empowering entrepreneurs across different ecosystems when it comes to investment. So with that said, let me pass it over and provide one more summary clip of the experience so far with this series, and then we'll look forward to welcoming our speaker who should be coming on with us very shortly. Ladies and gentlemen, thank you so much.
I was able to engage with a larger pool of investors, oftentimes had more access to decision makers because there just was that ability to be able to meet.
Our vision is a holistic one based on the belief that the strength and competitiveness of our economy ultimately depends on giving everyone the opportunity to participate and contribute. Let's not leave anyone on the sidelines.
Start Engine is one of the leading equity crowdfunding platforms in the industry.
So there's another about $3.5 billion that essentially needs to come from the private sector, and a lot of that will come from entrepreneurs like the audience in this meeting. So there's that one big demand issue.
Equity, as you all know, is dilutive, and it's at a valuation which is at today's valuation, which might be low for a company that's very early stage. And so if there's a way of avoiding the dilution of equity, that's always desirable.
So most of our startups that are raising from VC are also raising on Republic. And I think that's the incredible part of it, is that you can be raising from 2 different sources at the same time.
So there you have it. So I just want to again remind everyone that we are also capital raising at GSC. So you could go to globalstartupecosystem.com/invest to not only be a part of our investment community, but also be able to hear more information and updates internally. I mean, private updates about what GSC is doing, how we're scaling, the work that we do, some of our strategies and insights, and what we're learning from emerging markets around the world as we speak right now. I think it's a really great opportunity for you to learn about the work that we do and how we do it globally across these markets that we serve. So without further ado, I am excited to be welcoming our first speaker for the lineup. I'm going to do the 30-second countdown and we'll welcome our first speaker to the lineup today. So let's get that countdown ready. Please join me doing an amazing welcome to our keynote speaker, Ben Narasin, founder and GP of Tenacity Venture Capital, which is a wonderful name. I won't take any of your time, Ben. It's a pleasure to welcome you to this program. Thank you so much for your time. I pass it over to you. Thank you and welcome to the GSC Investment Summit.
Well, thank you for having me. I guess what I'd like to do today is talk a little bit about what I've learned in the 14 years I've been here in Silicon Valley, knowing that you're reaching out to a global startup ecosystem. I find that sometimes people don't always get what Silicon Valley is all about. So let me first start with a bit of history of me, and then I will talk about the things I've learned here and how people should think about this environment and whether or not their startup might be right for it. So I started off, basically spent my entire life as an entrepreneur. I started my first business when I was 12, ran businesses all through high school and college. And then when I graduated, went full-time as an entrepreneur and ended up starting one of the first web businesses in the world in 1993, right at sort of the birth of the web. That company quickly became a portal. I've been told we invented cost per click in 1994, although, while it helped the company a lot, I didn't understand the concept of business process patents, or it would have done even better for me. I took that company public in 1999, and very shortly thereafter, the bubble burst. And there was not really the same sort of opportunity for her web businesses that there was before. So because I had never raised venture capital, which is interesting now that I'm in that business, I was able to take that company private, which was a great outcome for everybody involved. We dividended out about 3 times the public share price in a single day, and then distributed out the remainder of the money and assets in the going private transaction. So that was in New York. I moved west, got to Silicon Valley about 18 years ago. And what I noticed at the time was there was a very large gap between angel and venture. Angel was in essence a sort of community group of people that would get together every once in a while, maybe once a quarter, to hear pitches from startups. And if they liked the idea, then they'd ask them for more information, and they'd take forever. And then they'd write very, very, very small checks. On the flip side, after the 90s, if you look at the 90s, venture capital firms were routinely single-digit hundreds of millions of dollars. But post the excitement the web created in technology investing, you ended up with multiple firms in the billions of dollars. And so venture firms, as they get larger, it's very hard to grow a venture firm by scaling the team. So you usually have to scale the size of your check. And this meant that there was this gap. Angel over here, very small, and venture over here, very big. And in the middle was this sort of opportunities where smart people with great ideas that didn't need a lot of capital, didn't have an easy access to that early capital to get started. So I was recruited in to build and run an equity practice at a large venture debt shop, a group called Triple Point Capital. And that became one of the probably first 3, to my knowledge, institutional seed investing practices in the country. So 2007-ish. There were not many people doing it. So I spent and this is an important part of my history as relates to the things I'm going to talk about around Silicon Valley. For 8 years, I did 2 things. I founded and invested in startups, and I got to know VCs at the top 10 to 15 venture firms, because the firm that backed me with their balance sheet was a provider of debt to venture-backed groups, and they wanted to know more of those people. So when I started that job, they asked me how many VCs I knew, and I added it up, and the number was 12. And when I left 8 years later, it was 327. So I got to know an enormous number of people that worked at the top 10 venture shops. Now, I took the approach I was a freelance writer as well for about 10 years. So I really took the approach of interviewing these people and asking them all kinds of questions, just trying to learn about what they were looking for, what made them good, and what things were they doing wrong, mistakes they'd made. And that was very formative to sort of how I learned the business. And that's why when I talk about my view of venture capital, it's not just mine, it's the view of, learning across hundreds of VCs that do this full time. So let's get into that. Like, what are Silicon Valley venture capitalists looking for? If you're a founder and you're thinking about whether venture capital is right for you, there's that old Willie Horton saying, why do you rob banks? That's where the money is. Well, people tend to go to VCs for funding because there's money there. But venture capital is not the right type of capital for most types of businesses. It is explicitly there for very specific types of businesses. Let's start with how venture capital firms work, just at a basic 101. So as an example, I've just launched a new firm, Tenacity Venture Capital. I spun out of NEA to do everything before the Series A, seed, pre-seed, formation, incubation, the whole thing. So I take my story. I'm a founder again. That's why my title is founder and general partner. I raise money for my company. My company in this case is an investment company. So I go talk to LPs, limited partners, folks that have material amounts of capital, and I tell them how I'm going to invest, what sort of companies I'm going to invest in, where I'm going to invest, so that I can make certain types of returns. Now, historically, if you look at, I sort of look at my history and I take it in 3-year chunks as the equivalent of a fund, because a fund would normally take about 3 years to deploy. My oldest fund is a little bit shy of a 14x returning fund. For every dollar it went in, $14 came out. The next fund's about 5.5x. The next fund's about 6.5x. And the youngest fund's about 2x. So, clearly they're investing in me because they believe I can do something similar, make them 5+ times their money back. And that's important because there's lots of different types of places for LPs to put their money, and each one represents a different risk reward ratio. My downside risk is that if I'm wrong, I lose all my money. But if I'm right, I want to make 40 to 100x on my investments. And this is probably the single biggest thing I think people sometimes don't understand. They've heard the 10x. Well, yeah, I'd love to have a 10x fund. I've had one that's better than that. But I can't have 10x investments because about 40% of investments in venture go to zero, or you lose money on them. So you don't make up for those with 10x's, not at the level that people are looking for, at least in my case. Now, the later stage you get, the lower the multiples or returns people are looking for. Now, people are either looking for MOIC, multiple on invested capital, or they're looking for IRR, the internal rate of return, the equivalent of an interest rate that they're paid. I'm very focused on multiple because when you go as early as I go, as I said, I'm shooting for 40 to 100x returns on these investments if it works out. I always say I need 5 things to make an investment: people, a great idea, and a huge market if it works. Well, if you look at traditional venture, the same thing holds true. So I created what I call the Ben rule. Arrogant, I know, but I always was envious of Moore for having Moore's law. So I created the Ben rule. And this is sort of how to think about whether or not you should seek out venture capital. And the mindset is take what you believe your ultimate outcome would be. The best possible situation, the thing that makes you happy enough to say yes to, the acquisition, whatever it is, the number that when you've worked really, really hard for 7 to 10 years and someone says, I want to buy this business for X, the number you're going to say yes to. Okay. Now take that number, multiply it by 20% or divide by 5. And then if that number is not half of the size of the venture firm you're pitching, you shouldn't be pitching them. Let's just do a simple example. You think that if you work incredibly hard for 10 years, this company you're building is going to be bought for $100 million. And that's big. And you're excited about that. Okay. Well, 20% of that's $20 million. You can't pitch very big venture firms. The thing is, you have to be material to a venture firm for them to want to make an investment. And the reason I'm having you multiply by 20% is that's typically how much of your company a venture firm is going to own. A venture firm will typically own about 20% of a company if they're investing in the Series A, and if they do their pro rata to protect it thereafter. And so that 20% needs to be material to the fund. So if you're at $1 billion fund and someone has a $100 million outcome, you're going to make $20 million. And you go back to your LPs that gave you that money and you say, hey, here's $20 million. And they're like, well, there's $980 million to go. So get back to work. And the thing is, a VC has whatever level of knowledge and experience they've gained, and they have their time as a way to deploy it, right? Obviously they're deploying capital, but the capital goes in once. The time goes in for the entire life of the company. And, therefore they can only do a finite number of deals. A lot of people don't feel comfortable on being on more than 8 boards. I know people that are on 20, but that's an anomaly. That's a sort of superhuman that I have an enormous amount of respect for. But if 8 is the number and your fund's going to be deployed over 3 years, I'm oversimplifying here, you're probably going to do 0 to 1, 0 to 2 deals a year. And if that's the case, every single one has to have a chance of being material enough to matter to your firm. Personally, I believe, and I think many people believe, if the company does not have a chance of being a public company one day, then you can't invest in an venture. Not in tier 1 venture, not when you're shooting for the kind of returns and you're managing the kind of funds that a lot of the larger shops are. So this is a common disconnect where I often see entrepreneurs. I run a site which is www.pitch-ben.com. Anybody can pitch me a 1-minute video of their idea, and I will promise them a 1-minute video response. Now, it's usually advice, but like this last batch, I saw about a dozen companies yesterday, and I think I asked for 3 or 4 decks so I could learn more. And I actually just made my first investment in a Pitch-Ben company about 2 weeks ago. Very excited about it. So I do that because a lot of people often ask, how do I get access to Silicon Valley? And by the way, I do see that there is a chat session on the side here. So please feel free to ask me any questions. I will try to pay attention to what's in the chat. And when questions come in, I will try to answer them. It says private chat. Maybe I should switch over to comments. Oh, nope. I'm going to go back to private chat. Okay, so if you chat me, I will try to answer your questions. But it's going back to sort of it has to be big enough. Here's the downside for you if you raise venture capital and it's not the right fit. Somebody will eventually tell you that if you're going to pitch a VC, you got to tell them it's at least $1 billion opportunity. By the way, I don't think $1 billion opportunity is big enough. I don't agree with that. Yes, if you're trying to trick them or game them or position it, but here's the problem. A venture relationship, somebody writes you a Series A term sheet. You're basically signing a one-way prenup. You're getting married. You're going to be with this person for 7 to 10 years. They're going to be on your board. Okay. And they have the right to push you out. You don't have the right to push them out. You really want to be doing deals with people that are in it for the same reason that you are. Because I have seen this on more than one occasion. Entrepreneur, I remember one guy back in the bubble bought a company that was sort of floundering, and he raised venture capital to do it. And then, let's say he bought it for $30 million. And then I can't remember the exact numbers, but later he had a chance to sell it for $120 million. Now he had $10 million in the deal. So he was super excited. He's going to make 4 times his money. He's going to make $30-40 million. This is great. And the VCs were like, no, that's not what we're in this for. And they vetoed the deal. In other cases, I remember I was talking to somebody where the entrepreneurs had worked really hard. They'd gotten an offer they were excited about, and the VC wouldn't support them. And I was like, well, what are you going to do? And he said, well, this is the challenge. Not only some, and this is rarer now than it used to be. A lot of VCs are very supportive and will sort of do what they got to do to help their entrepreneurs. But there are still some that will say, no, that's not what we're in this for. We're in this for big time. And you told us you were going big time. You told us it was $1 billion opportunity. Why would you sell $1 billion opportunity for $50 million? But here's the thing. No one should judge what's big enough to you, right? If you run a company that you can sell for $50 million and you still own half of it and get to keep 25, in a lot of places, that's life-changing money. So who's to say that's the wrong decision? It's just not the right decision for the venture firm. And so don't end up partnering with people that don't have the same goals and same possibilities in mind that you do. I mentioned pitch-ben.com as a way to sort of make sure everybody has access to me. Or to venture in general, because I know 327 VCs. If it's the right fit, if it's not the right fit for me, I can find the right person for it. I will tell you that most of those pitches end up getting, advice more than anything else. And I also, just for any of you that are interested in pitching me on pitch-ben.com, or for anybody pitching in general, maybe you're going to a startup competition, keep in mind that pitching is about specificity. What I often say to folks is you need to tell me who you are, what you are doing, who you are doing it for, how you're doing it, how you're doing, what they're paying you, and how many of them there are. So really get into the granular numbers and granular realities, because otherwise people can't make a decision. People see an enormous amount of deals, and they've really got to get excited, and they've got to get excited early. So always lead with your elevator pitch. Tell somebody, be prepared in any presentation you make, whether it's somebody you meet on the road that you think could be an investor or a customer, or going into a firm, start with that elevator pitch. I'm Ben Narrison. I'm running a seed investing firm. There you go. There's my elevator pitch. I'm a XYZ company. I'm making GPS-enabled collars for dogs with a cellular connection. So no matter where your dog is, you'll be able to find them. Okay, elevator pitch, right? And sometimes people say, oh, I have a very complex business, and it's very hard to explain. Einstein once said, if you can't explain something simply, you don't understand it well enough. There was a Nobel Prize winner that used to work at NEA when I was there, who explained nuclear fusion to me on a Post-it note. If somebody can explain nuclear fusion to me on a Post-it note, you can explain what you do in one concise line. And if you can't, you need to keep working until you can, because that is really critical. Well, I think that's the bulk of what I wanted you to understand. I am happy to take questions. This particular StreamYard system is not set up quite exactly the way some of the other systems I've worked with have been, but I don't know if our moderator is available to perhaps see if there's a way to feed questions in, or if you have questions for me, we can do a little bit of a fireside chat and sort of go down the road you think would be most useful.
No problem, Ben. We have time for about probably the top 3 questions that we see here. So we'll put it on the screen and read it out to you and then give you the floor. We have a question comes from Tanya, and her question is the VC ecosystem organized by sector? So specific VCs do deals only on fintechs. Do you have a focus sector? That's our first question.
Yeah, it's a fair point. It's interesting. I'm a generalist. I will invest in anything I find exciting and big enough, except 3 things: security, medtech, and core IT infrastructure. The first 2 because they require very specific domain expertise, and the last one because it just doesn't personally excite me. I've had to suffer too much pain there from my own businesses I had to build. Those are all big sectors, by the way. Now, in terms of the question, there are both generalist firms and sector-specific firms. Fintech is an area that more and more people have gotten into, but I would say fintech is so big now, everything can have a fintech component, and therefore fintech firms are in some ways more similar to generalist firms than they are to sector firms. I was just talking to an LP who's been doing this for 40 years, and what they found is that focused funds tend to underperform the generalist funds because they don't have a wide enough aperture. Think about my statement that I need to believe in a future public company. What I really need to believe in is uncapped upside. Well, if I'm looking for uncapped upside, but only in African fintechs, there might be some really big opportunities there, but I've narrowed my window down to an incredibly small aperture. But 2 things. There are some exceptions to that. Crypto-focused funds have done really well. And I think fintech, if you truly consider it a focus, which is sort of hard, have done well as well. But I prefer sort of being multidisciplinary. And if you think about like the best firms in the world, firms like Sequoia, Benchmark, NEA, they're generalists. You know, they focus on a wide variety of things. By the way, I said that once and somebody said, Benchmark's not a generalist. They don't invest in bio or hardware. I was like, okay, yeah, you're right. They don't invest in dog food either, as far as I know, or, dirt. But that's not the point. Generalists are like omnivores, right? They eat lots of different types of things. It doesn't mean they eat everything. I'm an omnivore. I don't eat rocks. So, it's not that you invest in everything. It's that you have a broad array of things that you can invest in.
I love that explanation on broad generalist. That's a good analogy to provide. We have another question coming from Sharu, and her question is, how do you go about evaluating early stage or pre-revenue companies to invest in? If you could talk about this at length, that would be great.
Yeah, I mean, everybody has their own strategies. I am not a checklist guy. It's like some people have they want to find all these specific things, Remember I said I need 5 things to make an investment. People, a great idea, and a huge market if it works. I want brilliant people, but I want to believe in the ideas they have now. What some folks will do is invest in brilliant people irrespective of their ideas. I haven't had good experience doing that. I want to believe in the idea, and I need to know it can be big enough if it works out. So I spend an enormous amount of my time on the first 3 things. The people. Usually it boils down to the founder. Now, the way to think about, like, when I try to evaluate opportunities, I was an entrepreneur for a long time. Nobody ever helped me out by being coy, by just saying nice things and not really caring. The classic, you really got an exciting opportunity here. We just want to see some more traction. Or, well, let me go back and talk to my partners and see if there's interest. Anything other than a second meeting is a pass. So I want to tell entrepreneurs in the very first meeting, what I often say is, I cannot get to yes in one meeting. I can get to no in one meeting, or I can get to, I want to spend more time with you. And if I'm going to spend more time with you, the number of times that happens will increase the likelihood that I'll make an investment. 2 times, maybe 3 times, probably 4 times. Well, I think it's going to happen. So I try to spend that time getting to know the person. Ideas, even great ideas, are not that hard to come by. Bad ideas are easier to come by the way. But, it's really about execution. I have seen entrepreneurs do exactly the same thing, one to succeed and one to fail, based on the difference of the quality of the entrepreneur and the quality of the execution. So I try to spend as much time as I possibly can with that entrepreneur. Now, I am digging into the specifics. I'm not saying that because I don't have his checklist, I'm not intellectually thinking about all the parts that matter. You're a SaaS business, and there's things I need to find there. I just funded a company that does plant-based tuna. So my last session was to look at the actual factory that made the product. It's like I ate it first because I said, it's food. I need to know that it's good. And it was awesome. It's called Kuleana. But after I ate it, then it was like, we need to figure out margins. We need to have production. We need to have retail price. What I liked about that company, I'll tell you, this is an example, because I've looked at a lot of food tech. Usually it falls apart in one or two places. Either it falls apart in the numbers or it falls apart in my mouth. This one was everywhere. Everything worked. I tasted it. Awesome. Looked like tuna, tasted like tuna, toothed like tuna. It's raw tuna for like sushi rolls, poke bowls. Secondly, they're already in production. That's usually a long journey. So that was another checkbox. Thirdly, they're at price parity with the traditional product. That's really important. And next, they've got sustainable margins already. You don't have to be profitable. I mean, nobody is when they're in a startup, but you have to have a path to that. Back in the day when I remember I was, when I had a web business, I was talking to this one guy, some entrepreneur, and he was talking about how he met with this investor, and they're like, how are you going to make money? He's like, you don't understand this business. And I was like, yeah, they do. You don't have to make money yet, but you have to be able to make money. It is, long-term. Amazon was well justified in losing money for a decade plus because they were acquiring customers that they would have forever and acquiring basically all of their wallet share. But if there's no plan that gets you to profitability, that's tough. If you want to understand, a lot of the questions I have for people in terms of my diligence are centered around whether I think they're thinking about things in a logical and intelligent way and whether they're going to be able to drive through. My firm's called Tenacity for a reason. Brilliance is assumed or I wouldn't have funded you. A great idea is assumed or I wouldn't have funded you. The difference between success and failure often boils down to whether or not you're willing to survive. It might be easy to say, but it's really hard to do. Being an entrepreneur is like waking up every morning and getting hit in the face with a virtual sledgehammer and then doing it again and having nobody to talk to about it. It's just really, really, really hard. In my early career as a seed investor, I went 3 years without having a single company fail, which I was amazed by because, I was investing in people with PowerPoint slides. How is that possible? And I was really worried about it because I felt like if I wasn't having failure, that meant I wasn't taking enough risk, which meant I wasn't going to get enough reward. Now, that was my 14x fund, so it seems like it worked out just fine. But I loosened up. That was a mistake. And the thing I loosened up on was across the 5 things. There are parts I can loosen up on. Like I got a little too obsessive about if there was even one risk factor I was really concerned about, I would pass. What I learned was I can afford to pass on, to not pass just because there's only one risk factor. If there's 6, then I'm probably going to pass anyway. But I can't loosen up on the people. And the first person I had that didn't make it was somebody that gave up, and that's just not acceptable. That's not what being an entrepreneur is about. He gave up after a year, by the way. These are long, hard journeys, man. It takes sometimes a decade to be an overnight success. I know people that have struggled for ridiculous amounts of time. So I really do spend a disproportionate amount of my time trying to understand whether that person is going to be that tenacious, driven, break through walls individual that's going to make this happen, regardless of what it takes.
Thank you so much. That was so well said. I see a lot of engagements on the chat feed. What you just said, especially just the tenacity of it all, like just really being about it and just going, waking up every morning with a sledgehammer. That's well said. I'm not sure if you have time for one more question, Ben.
Yeah, I always like to try to get
there's a lot of questions coming up, but we'll take one last question because I know for interest of time. And this is more an industry-specific question. This one's coming from Ida. What is your experience with MedTech? I know earlier you talked about FinTech. Yeah. I'm thinking because of the pandemic, they're asking this question.
Yeah, I don't do MedTech. NEA, where I was until recently, has a phenomenal MedTech team. I will tell you a little bit about what I've seen happen in MedTech historically, though, because during that first 8-year period, when I was getting to know VCs, I did get to know somewhat at the time were MedTech specific VCs. Now, here's the narrative of what I believe happened in medtech, at least from my sort of observational point. If you go back, when the bubble burst, it pretty much wiped out all future returns in technology investing for at least a decade. I mean, venture capitalists that had really interesting companies they're all excited about now had really interesting companies that were never going to get public and that nobody would buy. So for 10 years, you had no liquidity in traditional tech. But about 7 years into that period, all of a sudden, you started to see some liquidity in medtech. Now, it was smaller back then, 300 million here, 500 million there, 600 million there, not the multi-billion-dollar stuff that people wanted to see. But because of this, you saw a real rise in strength in some of the multidisciplinary firms. When I say multidisciplinary, in this case, I'm speaking in a different way than generalist firms. A lot of firms had separate medtech practices. So you had Kleiner Perkins had a separate medtech practice. Venrock had a separate medtech practice. NEA has always had a separate medtech practice, and on and on and on. More Davidow. And so in some cases, the partners on the medtech side really rose up in their strength and power and influence. And a lot more stuff happened. But then tech came back, and tech multiples and tech valuations and tech outcomes have been just so much bigger. I mean, you can have big outcomes in medtech, but man, it's like, look at the markets. Look at the last 10 IPOs. I mean, these are, Warby Parker goes out at, which, you could, I guess, is it fair to call it a tech business? I like the product. It's at a $6 or $8 billion valuation right now, but, you have a data company that NEA funded that just raised at $33 billion in a private round. So, a lot of those folks then sort of not faded. They still do what they do, but a lot of businesses got out of the medtech practice. If you think about the ones I listed, Kleiner no longer has a medtech practice, to my knowledge. Venrock has one or two people, I think. I'm not positive about that. More Davidow doesn't exist anymore. The top guys and gals on the tech team spun out as a group called Wildcat. USCP has a medtech practice that I like. I've done what I wouldn't call medtech so much as I'd call health tech. So I funded a company called Omada Health that helps people that are pre-diabetic from getting diabetes. I funded a company called CareRev, which is a nursing marketplace. And I funded another company that's doing sort of the Omada style model for menopause. So, I do things that are heavy on the tech. The trickiest part I noticed about a med tech deal in the environment I was in, and maybe different in other firms, is that to get a med tech deal across the line, the med team and the tech team had to fall in love. Is it, like a marketplace would be an example, like my nursing marketplace. So now if it's pure med, then the med team's going to do that. And it's not an issue. But there are still some specialists, just not as many as there were. And if that's the business you're in, then you got to find people that pursue it. Some generalist firms will also do in med tech. I think Founders Fund, which is a generalist firm, does med tech. They want to cure cancer and live forever, as far as I can tell. So, but, if you're going to go out there and pitch venture, make sure you know that it's relevant to the people you're pitching. It's sort of like every once in a while, no matter what I say, somebody comes on to pitch-ben.com and pitches me, let's say, a medtech business or a security business. And I'm like, not a category I invest in. Sorry. I don't know what I don't know. And that's way too dangerous for me to do. And I'm not going to go back and get the training. So I thank you for having me on. I thank everybody for listening to me. And if you've got a startup you want to pitch me, I'll say it again, www.pitch-ben.com, and I will promise you that you will get a response on the startup. Just make sure you tell me who you are, what you're doing, who you're doing it for, how you're doing it, what you're getting paid, and how many people are paying you. Okay? Give me the specifics. Thank you.
Thank you so much, Ben. It was an honor to have you, and we look forward to staying in touch with you at the GSC Investment Summit community.
Awesome. Thank you again. Take care.
Thank you so much. All right, ladies and gentlemen, there you have it. I saw a lot of engagements. We will be sharing his LinkedIn profile so that way many of you can engage with him. And of course, he just shared his direct website information for you to be able to pitch your company. So again, another huge shout out and round of applause to our first speaker, Ben Narson, founder and GP at Tenacity Venture Capital. It was an honor to have him. With that said, we're just going to do a quick break before we dive into the workshop component. So stay tuned. We're going to give you a quick clip and then we're going to dive right into the workshop component.
But this world, as big as it is, one person could be the tipping scale to really create a domino effect that no one ever seen coming. I would like to remind people, there's going to be a lot of people that's going to judge you and tell you you're too naive.
All right, just giving you guys a window into the GSC vibe. So now let's dive into a very, very popular workshop. I remember we did part one of this workshop earlier during the GSC Investment Summit. And I got tons of requests for me to elaborate more on this workshop conversation because I think I went over in 15 minutes. So here I am. I'm about to dive right into how to raise $1 million or more for your startup on crowd equity platforms this year. So I'm going to be sharing with you exactly how we're going about this experience, insight from our partners who are also supporting entrepreneurs, and walk you through that journey. So I'll begin by saying that, I speak honestly from experience, or at least the journey of the experience. So as it stands right now, GSC is also open for investment. We're coordinating capital raising. If you go to globalstartupecosystem.com/invest, you can follow the steps to be able to invest in our platform as we scale and do the work that we do around the world through GSC. Or you could also go directly to Start Engine, where we're hosting our funding round, where you could become an investor. So let's get started. When it comes to raising capital, I think it's extremely important that more and more people understand the fundamentals of getting prepared, because many individuals that I've spoken to in the past who are interested in doing a crowd equity raise are kind of not sure about how to go about the process, right? So I'll start by saying what to do before, during, and after your fundraising experience, and of course, things to look out for and to prepare for as you start the journey. So I'll start with before, right? One of the most important things to start with is really looking at the top equity platforms that are available within your respective country and applying to actually list your company for public investment. I think a lot of people forget this main step. The same way that you pitch VC and venture capitalist firms your idea for your business to get funding, you also technically have to pitch these platforms because there is an approval and due diligence process for them to be able to accept you. So some of the top 10 crowd equity platforms in the United States include Start Engine, Republic, WeFunder, Seed Invest, et cetera, EquityNet. So it's really important that you take the time to really look at all the platforms and actually create your pitch deck and submit it for review. That's the first steps. I think a lot of times people think that to get on these platforms, you list it as if you're doing a crowdfunding platform. And again, I want to stress there's a difference between doing crowdfunding, where it's a donation perks model, versus crowd equity, where people are actually investing in your business and get equity shares in what you're doing, or debt equity shares. So wanted to stress the difference with that. So very, very important that that's very clear. So apply. So one thing I would suggest, really quick tip for those of you entrepreneurs, it's kind of like when you apply for an opportunity, don't put all your eggs in one basket. I suggest you audit all the different campaign platforms that are available to you and apply to a minimum to at least 2 different platforms. So that way, let's say, because some crowd equity platforms, they look for a certain type of entrepreneur, they look for a certain type of company to raise on their investment site. So it's very important to think apply to multiple. So you might get rejected to this one, but accepted to one, or you might get accepted to both, and you see which one has a better aesthetic for your company to capital raise, either the user design or your community, knowing about that platform. So definitely take the time to apply to at least more than one. And before you even apply, audit the current campaigns that are running. Look at the campaigns that are currently listed on the homepage. Do any of them remind you of what you're doing for your company? excuse me, or do any of them have similar go-to-market strategies that you have? Audit the campaigns, because this is going to be your experience if you're accepted to the platform. So it's very, very important that you take the time to look through the campaigns. So for example, when we were applying, I looked at Start Engine, Republic, and WeFunder, and I audited at least 10 different campaigns similar to our company to see, like, do I feel comfortable raising my crowd equity campaign on this platform? And I had a dialogue with my co-founder, my team, as to the experience of going on these platforms, and I was able to make my decision, submit my application, the ones that I felt was best for our company, we move forward for. So I want to take a pause and let that sink in for a second. You got that? Okay. So I wanted to make sure step number 1 sunk in. You see that, you feel it, you receive it. Perfect. Okay. Now, once you submit your application, they'll either send you a calendar invite to say, okay, interview and review. This is the first step of the process where they need to just have a one-on-one dialogue with the founder or the head of capital raising at your business. Most likely, I would suggest it better be the founder or the CEO. And you're having an interview. Sometimes these interviews are 15 minutes, 30 minutes, 45 minutes. The point is you're going to have the capacity to be able to have an interview dialogue to elaborate on your business and why you want to capital raise. So that's step 2. Once you have that interview, and they are able to evaluate, they will make a decision and let you know if you're accepted. And if they accept you, then you make a decision by accepting the agreement. You'll send you a contract agreement before you could be able to capital raise, again, because you are actually going to be doing a capital raise. So it's important that you understand the fundamentals and the details, and they will send you an agreement. Once it's signed, then you'll be going through due diligence. Now, before I get into due diligence, I wanted to stress again that your company has to be prepared for investment. This is not something that you're just throwing out into the ecosystem just to get capital. You have to be ready for investment. So due diligence will encompass of several different things. Is legal due diligence, are your bylaws in order? Are you registered? Are you incorporated? Are you in good standing? There's a financial due diligence, right? So your taxes, financial statements, your chart of accounts, all that will be evaluated. Operations, your business plan. Do you have an actual roadmap for building your business? Because you're going to have to answer questions about milestones, roadmaps, what you're going to do for your business. Marketing is probably a big component, because those 3 fundamentals, legal, financial, operations, are what's needed to make sure that you're ready for investments. The marketing campaign is going to be what's going to be needed to make sure that you're ready for a campaign where you're calling to the crowd to ask for investment for your business. And so your website, social media, and your messaging footprint. I'm going to share with you my experience in sharing my journey when it comes to capital raising. But it's important that you complete the due diligence and audit yourself, because you will be audited with this platform where you have to show proof of record for anything that they're auditing within your company. So it's really important that you go through that. And then finally, the final step is preparing a marketing plan, your promo video, promotional content like flyers, videos, content blogs, and messaging about your capital raise. And then finally, whether you're going to do this entire campaign internally, or are you going to partner with agencies to support you with their marketing? Regardless of your decisions, you need to really have a thought out marketing plan for the entire duration of the capital raise. Usually capital raises, from what I've seen, could be anywhere from 3 months to 6 months, sometimes 30 days. It depends on how long you're doing the capital raise. The most important thing is that you maximize the window, because especially during a pandemic, you never know what's going to hit you in the face when it comes to the journey. So be prepared to go through the process. So with that said, I'm going to take a pause right now, and I'm going to walk you through our journey of marketing and sharing the GSC story. And I'll start with give you, again, our promo clip of the GSC experience, so you could get a window into what we do and how we were able to market that at the beginning of our capital raise.
But this world, as big as it is, one person can be the tipping scale to really create a domino effect that no one ever seen coming. I would like to remind people, there's going to be a lot of people that's going to judge you and tell you you're too naive.
So I wanted you to see that clip. It was just less than 30 seconds, but just to give you a window into how you're going to have to like figure out how to share your story through video. So that video is a 30-second clip, again, of GSC and the work that we do. And obviously there's clips of me as the founder, pretty much sharing my energy, my excitement, you know, pretty much my prowess and what I'm building, because as many of the speakers you will hear from, when it comes to raising capital for your business, you got to share who you are and what you are about, because they're not only investing in your company, they're investing in you as a founder and your tenacity, your passion, your resilience, and your energy to keep moving forward no matter what. And so that promo clip, you know, it's literally a testament to visuals of GSC at work in the programs that we do around the world through our tech summits. And we saw logo displays of our summits in Haiti, Ghana, Nigeria, virtual reality, AI. So you got to see different clips of our work, but also my thought leadership, me speaking in front of thousands of people about the work that we do. So from that clip, you can see, you know, pretty much the work that goes into sharing your story and your journey when it comes to building a campaign. Of course, I will share with you another promo clip as to, you know, how we're able to share that vision, but I want to share that insight with you firsthand so you can see that. So in telling your story and narrative, you'll have to share your personal narrative as a founder, but also the company narrative. So I'm going to start with my personal narrative. So many people know my background story growing up as a street vendor, where my family were all street vendors. I come from 3 generations of street vendors, and that's how I was able to build my journey of entrepreneurship, of understanding street markets from around the world and building my brand around digitizing emerging markets through street markets, and really building not only a brand, but a reputation for being very passionate about the subject. It's something that I still do to this very day, empowering street vendors globally. I've met a lot of influencers, celebrities, and pioneers along this journey, and I've shared my story through the programs that I've run, the programs I've been a part of throughout the world. And I've been fortunate to not only be featured in media outlets, but also my business. My first business is actually a case study at Harvard Business Review. And so that journey of entrepreneurship, building my company, has led me to always build something that really empowers the communities that I serve, and something that many people know. I've said this many times. I'm a proud Haitian, and of course, you can hear from my accent, I'm American, but I'm proud of being Haitian American. And my vision has always been to not only change the narrative of Haiti, but also change the narrative around emerging markets and the innovation that happens around the world. So a lot of the work that we do at GSC, the exception of GSC, and this is where I transition from my personal narrative, how I got into entrepreneurship, into my business narrative, how we started, right? So this is an image of our Tech Summit program that we did in Haiti. And then, of course, we started launching these Tech Summit programs in Ghana, and then across Africa, Ethiopia, Nigeria, Kenya, Rwanda, and of course, around the world with celebrities and partners of all walks of life. I've worked with over 140 different global partners, from the IBMs to the Amazons to Google to Microsoft. I mean, you name it, we work with them in some type of capacity in the past couple of years. And I'm able to share this journey with people who want to invest in GSC. And so it's definitely been a journey sharing how we started, even selling out our free boot camps. And keep in mind, we keep our programs free and accessible to all, but this is how we started our programming, which is pretty much building on that narrative. And this is me as a founder sharing that journey in thought leadership across different markets around the world. And I can share with you, I've spoken about this vision of preparing individuals for the digital age for years now, to thousands of people. It's ironic that it took a pandemic for the world to see the power of the digital space and the power of bringing people to these opportunities in various different ways. So I'll pause here because I wanted to share that, you know, that vision with you all about how we were able to share that narrative about GSC through our campaign, in ways that you could also think about what you've been through as an entrepreneur. Share that story. And I mean it. Don't just share the highs, share the lows, because a lot of times when people are thinking about what they're going to place their energy, their time, and more importantly, their capital capital in, they have to know what you've been through, what you've done, what you've accomplished, and why you want to continue down this path. Because you almost got to help people figure out, why do you want to go through this misery for the next 10 years, right? Why do you want to put yourself through this crazy ordeal that is called entrepreneurship? Because you believe in the work that you do. If you could show people and prove to people through your story, through your energy, through your heart, through your traction, right? The work that you do, that this is a part of you and you're unstoppable in terms of making it happen, it shows a lot about why they should invest in your journey. So I wanted to, again, share that, with you, because it's important that you have an understanding as to how you're able to share that narrative with pioneers when it comes to building on your thought leadership. So with that said, the last part I'll share with you all in terms of, being able to raise and crowd equity platforms during the campaign is really sharing the roles of each member of your team as what needs to be done to really prepare for this campaign. So once live, team roles, who's going to be handling emails, live events, live engagements, who's going to be doing the email marketing, the social media marketing, who's going to be preparing weekly updates on the campaign, because keep in mind, whatever platform you're using, you need to be sharing, updates on that campaign so people know what's going on, right? Who's going to be engaging advisors and optimizing updates based on their feedback. And after the campaign is done, how are you going to keep investors informed? I know for us, we have a private community for our investors where they could get continuous updates, private updates as to what's happening with GSC and the work that we do around the world. So these are things that you have to think through when it comes to capital raising or any platform, right? So it's very crucial. And one thing I will say is have your deck ready. So one thing that was very paramount that I saw a lot of people ask us is, okay, you could raise with VCs and angels, but why are you raising through a crowd equity platform, and why now? So for us, we're raising through a crowd equity platform. Our reason is because we've done work across so many different markets. We believe we have the community to back us to kick off a capital raise. And the reason why we're doing it now is because during this pandemic, we have faced increased demand. So we now know that this is a great time to engage our community, since demand for our products is at an all-time high right now, especially during this virtual remote work environment. So we started with that first, answering that immediate question, why now and why in this manner, right? And then we walk people through what we do in helping people connect with the world's emerging market tech innovation hubs through our mission of inspiring people and prepare people for the digital age, and really having this advantage of serving emerging markets. We have been serving emerging markets for years. So we share that narrative in our pitch deck, how we've been able to do that, how we've been able to scale, and how an investment into our company will help someone scale effectively their investment, but also their impact. I think probably the biggest thing that people love about what we do as an organization is that we scale impact efficiently, but also we have a lasting impact in the work that we've done, right? So instigating this industry paradigm shift comes with the traction that we've done, whether it's revenue. I think the biggest traction that we've done is actually working with all these different pioneers, having over 250,000 subscribing members work with our platform, and having six-figure contracts with big names like Microsoft, and big partnership contracts with governments, entities, and of course, celebrity endorsers. So this has been a big part of showing the traction, our features and media outlets, also the speakers who've been involved, and also more importantly, the people that we serve, hearing from them, their testimonials and their feedback as to what impact GSC have made in their lives. And of course, sharing our team and our thought leadership and how we were able to do this as an organization. So that's how we've been able to prepare for our due diligence during, and also sharing that narrative, sharing that feedback. So I'll end by saying that this journey of capital raising is not easy, right? It's something that's going to require a lot of energy, a lot of time. But if you have the heart for it to share your journey and go through it and really answer thousands of questions, by the way, because you're going to receive a lot of questions about your business, what you've done, how you've done it, go for it, right? Because again, you have to be prepared for the process. And one thing I will say, I walk you through the process. The last thing I will say is it is a financial commitment to get to launch on these capital. It does require money and an upfront investment. We spent thousands to go through the due diligence process with our accountants, with our partners, with our due diligence, with our legal team. So what I walked over today for this workshop is really the due diligence process to get prepared and how to actually run the campaign. But I will share again that there's a financial commitment for you to be prepared to use these third-party, entities to be able to support you through the due diligence process. So like I said, feel free to support us in our journey. Feel free to watch our journey as we build and scale our company. Again, I'm going through this right now. So a lot of you know me. I'm very transparent. I share the journey, the highs and the lows. So I'm in the thick of it right now as we speak. So hopefully you guys support us in this journey and hear our updates as we go along, because we're excited and proud of where we're at as an organization to even have come this far as an organization. So really excited about this. So definitely, hopefully you found this very helpful and useful. And thank you so much for hearing our workshop about how you could pretty much capital raise in this year and raise $1 million or more through crowd equity investments. I hope you found this useful. I'll end with a brief promo clip before we transition to break and our panel discussion that's coming right up. All right. So thank you again for joining me for that workshop. In the next 3 minutes, we're going to kick off our panel with our panel guests. You're not going to want to miss this. This is going to be an amazing panel where they're going to share their insights, their career journey, what they've learned, and getting into the investment landscape. I'm so excited to welcome and moderate this conversation with this amazing panel of amazing speakers to close out our session. So get ready. I know we're still on break. So in the next 3 minutes, we'll transition to these amazing speakers. For now, here's a quick promo clip on an interview I did with Forbes, and then we'll come right back to join for this amazing panel that's coming up next.
Grow up to be yourself. Start my day with what I want it to look like at the end. Before, when I was in that hustle culture mentality, I always said, like, I have 1,000 things to do. It's my checklist, and kind of went through my day just checking things off a list. But instead, I thought of, like, starting my day with, what's one thing that if I did today, I would be happy. And sometimes that might be, doing an important phone call or working on something for the team or a project, or just being lazy. Right. But whatever I visualized that to be for the rest of my day, that was my main focus for the day. And it helps me prioritize so I don't get into this to-do list mentality. Grow up to be yourself, period. And so I always say to the younger generation, especially in this day and age where nothing's certain and change is a constant thing, you want to grow up to be the best version of yourself, period. And whatever that means, everything along the journey from when you're young to when you grow up, I wish people told me that, because if I realized it didn't matter if I grew up to become a doctor or a lawyer or entrepreneur, it doesn't matter. If I just knew as a young girl that you just need to be the best version of yourself, everything falls in life. Because as I grown up and I realized I started to embrace my personality, my quirks, my weaknesses, my strengths, everything that makes me unique, whether people love it or not, it's helped me actually to get towards what I really want to do in life. And I think we're all on this journey of self-fulfillment. And I think we all need to find that naturally. And the only way to do that is to be yourself, because you start to pick the roles and pick the opportunities that make you shine. And the only way to do that is knowing that when you want to grow up, remember that question, what do you want to be when you grow up? Be yourself. My coworkers will definitely describe me as bold. I'm always like, oh, so this is the standard. Why can't we do this standard, right? Which leads to the second way that my coworkers, I have a kind of like a little nickname, No Excuses, because I work really hard. I really put like 1,000% into a lot of things I do. And so my coworkers kind of like, it's very hard for them to come up with excuses to why they can't deliver, simply because they know anything that I've asked of them, I've already done it. And I've done it 10 times over. So it's very hard for my coworkers to feel like, oh, it's just someone shouting orders. No, she's done it before and she really expects that of us. I've also been told that I've been very vulnerable. I'm very open. I know people separate work and home life a lot, but I do believe that you're not just your role, that there's a lot of things outside of work that makes you who you are. So me being a mother, and me being a wife, me also being, a dancer and a free spirit, like all that leads into my personality. So they know like I'm perky, I'm fun, I'm goofy, but I'm also very on top of things, and all that, I expose them to all of that. And so it helps them be more open.
I was able to engage with a larger pool of investors, oftentimes had more access to decision makers because there just was that ability to be able to meet.
Our vision is a holistic one based on the belief that the strength and competitiveness of our economy ultimately depends on giving everyone the opportunity to participate and contribute. Let's not leave anyone on the sidelines.
Start Engine is one of the leading equity crowdfunding platforms in the industry.
So there's another about $3.5 billion that essentially needs to come from the private sector, and a lot of that will come from entrepreneurs like the audience in this meeting. So there's that one big issue, demand issue.
Equity, as you all know, is dilutive, and it's at a valuation which is at today's valuation, which might be low for a company that's very early stage. And so if there's a way of avoiding the dilution of equity, that's always desirable.
So most of our startups that are raising from VC are also raising on Republic. And I think that's the incredible part of it, is that you can be raising from two different sources at the same time.
There you have it, ladies and gentlemen. So I'm hoping that you guys are excited and back from break. We have our final panel for the day. So we're going to run a 30-second countdown and welcome our two amazing speakers for this panel. So get ready. We're going to welcome them right up. All right. Hello and welcome. I'm so excited to welcome both of you to the stage today. Definitely is an honor to have you. I know there's a lot of excitement about this. So ladies and gentlemen, we have Spencer, the co-founder and GP at 75 and Sunny. And we have Ngozi, managing partner at Echo VC, who are joining us today. It's an honor to have both of you. So I'll start by giving both of you the opportunity to introduce yourselves before we kick off with questions. So I'll start with Spencer, and then we'll pass it off to Ngozi to give opening introductions in the work that you do.
Great. Thank you for having me here. I've had a long career in tech. My first startup was a company called Hotwire, which we sold to Expedia. My next startup was a company called Zillow, which I started in 2005 with a great team, and I ran it for almost 15 years. When I retired from Zillow, I started angel investing through 75 and Sunny, and also incubating and starting other companies. And a couple of my current ones are Picasso, which was the fastest company to become a unicorn, a company called Recon Food, which is a food social network, and many others, which I'm sure we'll hit upon at different points in the conversation. Thank you for having me.
It's a pleasure. Please feel free to introduce yourself. Welcome.
Great.
Thanks a lot. So my name is Egosa Moigui. I am a managing partner of Echo VC. We are seed and early stage technology venture capital fund focused on investing in underrepresented founders and underserved emerging markets. Prior to this, I was at Intel Capital for just under a decade. My claim to fame at Intel Capital was writing an investment thesis and strategy on putting growth checks into some of the best internet companies. And so over a 4 or 5 year period, I brought in all the big names: Facebook, LinkedIn, Pandora, AdMob, Groupon. Couldn't get anybody to invest. Couldn't convince them to do it, which of course now looking back was a little bit of a shame. But I left to start Echo VC, and the thesis was to look around the corner and look for very interesting founders doing interesting things that the market discounted or underestimated. We have just under $45 million under management, and continue to do interesting things across borders. So very excited to be here.
Thank you so much for those amazing introductions, and we're gonna dive right in. So one of the things that has been a big proponent about this session is really hearing about your career journey, because I think we talk a lot about the investment landscape of how do entrepreneurs get access to capital, but no one talks about the investors themselves and their journey, how they got on the other side of the table. So I would love to start with Egosa. If you could just share with us, how did you start? What's your investment thesis? And how can someone follow that journey if they want to be able to provide capital to entrepreneurs? How did they get into the line of work that you did? And then we'll pass it over to Spencer. So I'll pass it over to you.
Sure. So I think I'm incredibly grateful for where I sit right now. And when people ask, well, how did you get there? I was like, in a very non-linear way. I started off as a lawyer, and what was also, I think, interesting was that I had external interests, right? So you're sort of, doing all the legal stuff. And, I actually started off as an oil and gas lawyer, to be more bizarre, and then moved into sort of corporate. But, and maybe because my brother is a computer scientist and engineer, we also had shared interests in technology. And so there was that little side hustle where I just kept looking, just sort of keeping abreast of technology. But the fact of the matter is that a lot of the trajectories that I hit, in sort of my career have been from external forces that had almost nothing to do with sort of what I did sort of on paper. So for instance, when I was at Intel Capital, I was doing M&A, I was doing VC, I was doing post-merger acquisitions and integration. And then, I started, looking around and taking, sort of feedback from my environment. This was, first of all, when the sort of the NASDAQ crash post 2000. And so one of the ideas I had was, wait a minute, what's all this value that was created by these companies that are shutting down? What are we doing about it? And so I was like, let's go found a patent purchase group. Right. And that was just, I had not done anything in patents, but I was like, it was obvious that there was an opportunity there. And then from there, sort of extended that to sort of a bankruptcy and restructuring group that essentially helps shut down in an orderly way companies, portfolio companies and suppliers. Well, that got me some visibility, but what changed my trajectory had nothing to do with my legal background, what I did at Intel. What changed my trajectory was that I eventually met someone, and it's this concept I call the power lifter, right? People use, sort of a similar concept called allies, but, they're allies and then they're lifters. And so I met a lifter who essentially I met because we had a shared love of cars. And I know this is kind of bizarre, so I always tell people career paths can be really bizarre, but we had a shared love of cars. And so we would spend all this time chatting about cars, and then he taught me about wine, and he was a little bit of a foodie, so he taught me about food, and we would talk about politics and economics and technology and the like. And I had no idea that I was on a 3.5 year interview. No idea. And so, I realized that I want to get into venture. I'm Black, I'm in the Valley. I don't have an MBA, I don't have a CFA. So I was like, look, I have to go do an MBA. And so I had two opportunities to do a full-time MBA or to do one where I was sort of working. And I realized that the opportunity cost of doing a full-time MBA was too high. So I decided to do a fully employed full-time MBA. And that was a big trade, because eventually I kind of had, I lost sort of my marriage because of that. but it's a big trade. And so when you sort of look at some of these things and the career paths, you know, people don't see those trades. But I eventually got offered, you know, to become the technical advisor to the president of Intel Capital. First of all, president Intel, you know, treasurer, and then president of Intel Capital. And it was from there that I really blossomed, right? Because I realized I had gotten to this point, and I was putting the work in. I eventually, when I did the MBA during this period, but I put the work in. But that external interest for technology then came to bear because I was really going out there. This was sort of when the Web 2.0 thing was growing. I was going out there. I was talking to people, and I come back and I say, look, this is a huge opportunity for us. How do we think about it? You know, and no one was thinking at that point in time, well, write $50 to $150 million checks in the biggest 10, 15 biggest global businesses. Certainly, no one was talking about it to us, but it was my idea. And I think, you fast forward. I went out. I chased Reed. I chased Mark. I chased Joe at Pandora. I chased everybody down, and it helped because I was sort of doing this venture thing, and I didn't look like anybody else. So it made me, I think, much more memorable than many of the people I was competing with, and that was dramatic. But I think a lot of that was the legal background certainly helped in terms of how you think about risk. But a lot of it was also put in the work. And so when I tell people that the trades you make for this, people call it a tax or whatever, but the trades you make are really, really difficult. You have to be 2 or 4 times as good. You have to be always on. It's incredibly corrosive just being able to be present and memorable and distinctive and to be able to, win. And that's, that was sort of the start. And, I was able to sort of live Intel, go out, try to raise some money. That was also very difficult because, it just was, I didn't really look like a lot of people who were doing this. But I've always tried to, sort of make my own road. And, there's a well-known saying by Ty Sholarin, a Nigerian writer, may your road be rough. And in many ways, when you think about that, it's how you sort of build the resiliency and the tenacity and the conviction that is necessary to become, I think, a really good investor.
Amazing. I especially love what you said. I didn't know I was on a 3.5-year interview. That really captured a moment for a lot of people on the call. Spencer, over to you. Please share with us, how did you get into this role? How did you start? And we would love to hear your journey as well.
Yeah, so as an investor now, I started as an operator, and there are a lot of paths, as we just heard, there are a lot of paths to becoming a good and prolific investor. Mine was through the operator path. So I started as an investment banker, didn't like it, moved into private equity, didn't like it, decided I wanted to do startups. And after, almost 20 years at different startups, I decided that, being a full-time co-founder and CEO is, in a lot of ways, it's sort of a young person's game because the energy and focus and intensity that is required to be a full-time co-founding CEO is enormous. So I'm at the stage of my life where I want to be a coach, not a player, and coach multiple teams on different fields at the same time. And so for me, that's investing. Just listening to the career path we just heard about reminds me of one of my favorite expressions, which is luck is what happens when preparation meets opportunity. So, people could certainly say that I've had luck in my career, and I certainly have, but I would prefer to think of it as the intersection of when I was prepared for something and an opportunity presented itself and I was able to seize it. You asked also about some of our investing themes or the types of things that I focus on. Since I left Zillow, or even back before I left Zillow when I was angel investing before that, there have really been 2 major themes that I've been starting companies in and investing in. One is around democratization to access of things. So if you think about Hotwire, that was about democratization of access to cheap airline tickets, cheap hotel rooms, allowing more and more people to travel through online discounts. Zillow was about democratization of access to information so that people could have access to all this great data to help them make more informed decisions about real estate. My new startup, Picasso, is trying to democratize access to second home ownership so that it's not just something that the 1% can experience, but hopefully many, many more tens of millions of people can experience the benefits to them and their family of owning a second home. So that's what Picasso is trying to do. The second major theme that I've invested in and started companies is unbundling and verticalization. So, there are a lot of great companies that are horizontal and huge, Facebook, Snapchat, Twitter, for example. I'm focused on the unbundling of social media and as it becomes verticalized. So, for example, Recon Food, which is a food-specific social network. You, of course, can share food on Instagram. Many people do. But if you want a dedicated space just for sharing recipes and food, Recon Food is for that. Q is a social app just for focused on streaming. So you could talk on Twitter about TV shows and movies that you're watching, but if you want to do that in a more narrow focused way to do that, then that's another of my startups, Q. .LA, which is a news site that just focuses on LA tech. Again, there are plenty of national news sites that talk about tech. .LA is just focused on LA tech. So, we saw this in classifieds where early internet, there was Craigslist, there was Yahoo that had all these horizontal things, and then it verticalized into, LinkedIn and Strava for running and Peloton for cycling and AllTrails for hiking. And, as things become massive and horizontal, they then tend to become verticalized. And so that's the other major theme that I'm investing in and incubating companies around.
Well received. Thank you so much for that. And so just diving into one of the most immediate questions that I know our audience has been asking is, you're on the other side of the table. You get pitches all the time. What are the top things that you're looking for when it comes to the company? Or better yet, what advice do you have for entrepreneurs as they capital raise for funding?
Shall I go? Or, okay. I'll jump in. So it's a great question, actually. A couple things. First of all, I'm looking for grit. The prior presentation where you showed your background and your experience of having grown up as a street vendor. I mean, oh my gosh, that's music to my ears as an investor, because you're like, wow, there's somebody who has faced rejection, faced, people dismissing that person, and she has something to prove. Like you can tell when you just speak for 5 minutes or 30 seconds that, you're here to show the world, that you got something to prove, and you're not going to rest until you do that. So that grit is really important. Number two is founder product fit. So in other words, is the idea that this founder is promoting, is it something that they're really personally connected to? Were they put on earth to do this exact thing? There's no such thing as a great founder. In my opinion, there's really only a great founder for a specific idea. The third thing, and I wish that I had focused more on this earlier in my earlier angel investing. I've only more recently sort of realized how important this is. It's the person's ability to raise future capital. When you invest, especially at the early stage, you're making a bet that they're going to be able to keep raising enough money to extend the runway to have enough time to figure it out. And so that's very, very important, is assessing, do you think this person's going to be able to raise more money down the road? I guess fourth, I'd say total addressable market. So market size. I get a lot of pitches that are features, not companies. They're decent ideas, good ideas perhaps, but not big enough ideas to be venture funded and have venture type exits, which is really what you need. If you're investing at the early stage, you need to believe there's a 500 million, billion, multi-billion-dollar possible exit. Even though it might be unlikely, you have to believe that it could be possible. But if the idea's maximum exit value is 100 million, that may be great to bootstrap, and the founder should go pursue it, but it's not really venture fundable in my view.
Yeah, it goes as you elaborate on it. Can you also share some things that you've been trying to highlight that entrepreneurs take notice of when it comes to pitching for capital?
No, Spencer's been absolutely on point. For us, certainly based on our background, there's an intersection. I like to describe it: founders found, storytellers raise, right? And so how you blend those two things, I think, is going to be a very important marker for your ability to stay in the game. And staying in the game, having enough cash, having enough talent, having a decent enough product is pretty much everything you need to do, right? So getting that intersection is very right. When we're looking at founders, our sort of underpinning really is looking for founders that, first of all, are very driven to make innovation accessible, right? And so you tend to find that underrepresented founders tend to have that lens, because a lot of it is just built on their own experiences. But making innovation accessible always sort of makes draw view. It draws the addressable market much closer, right? So you can sort of say, okay, this is a market. And what we've also found is that we like, we always say this, we like secrets. We like founders that know secrets. We like markets that are secrets. We especially like open air secrets, the ones that you actually walk past every day, and you just have to have the lens for it, right? So that's a very important thing. So when you're talking to the founder, we always sort of want to know, what is the secret that you know about something or some market or some opportunity or some product that nobody else seems to, right? So there's that. The other thing that we like is founders who can attract who are sort of on a mission, because missionaries attract converts, right? And that's key. We've seen this, Sarah Menker at Grow Intelligence is an example of that, right? She's on an absolute mission. And what we've discovered even now post, as we gone through the pandemic, is that, we're getting talent coming into that company that 2 or 3 years ago may not have done it. They're walking away from huge pay packages because they now are now dialed into the mission. So, we've seen sort of the A/B test on that, and that I think is going to be important. The third thing I think founders need to be clear about is not getting caught up in the complexity, because a lot of the markets that you're serving, we say this in emerging markets, when people are sort of describing a product, I'm like, it needs to have zero cognitive load. These markets are so difficult to live in every day. It's just chaos. So your product cannot come and layer on additional chaos, cannot come and layer on additional stress. It has to have zero cognitive load. So being able to sort of think through a product and say, look, what does this product need to do in its very simplest iteration, right? So you're not trying to sort of solve world hunger. There are other people doing that. Sarah's doing that at Grow. But, what does that actually mean? And being able to speak to that. And then I think the fourth is that as investors, we've done really well with not just underrepresented founders, not just Black and brown founders, but we've done really well with women founders. And what we found as well is that, and this is anecdotal, it may not be true across the board, but what we found as well is that making adjustments to the way we receive founders and with the way we talk to them is super important. A lot of the female founders we've seen, we don't actually want them to walk us through slides. What we found is being able to put them in a context where they're absolutely lighting up, because it's a discussion. It's not a pitch, right? And that's been sort of an important, sort of metaphor. And so I would always sort of tell entrepreneurs, if you can, especially if you're not that great a storyteller, just put the slides aside, send them in advance, whatever it is, but come with your best you. Come with the energy and the conviction and the goals and the ambitions and do that. And then the final point is a question we ask all the time, because I know underrepresented founders do this. Is this your best idea? And a lot of them will come pitch because they're like, well, I hear this is hot, so let me go sell this. And the truth is, we're seed and early stage investors. We are circling or skating to a market that's maybe 2 years in advance. So what's hot today is really not that interesting. So it's okay if you have, it's getting to where the puck is, sort of goal or product or objective. That's really sort of more important. So don't be afraid to share what's truly, what you truly want to build and how you truly want to serve and what you really want to do to make innovation accessible. It's fundamentally that. And, for us, we're always looking, and we carved up the world into sort of 4 quadrants, right? Organizing the offline, right? Because a lot of people sort of assume that digitization has hit most of the world. It's not actually true, not at real scale. So how do you organize the offline? We think that's the way to build a moat. How do you provide products that act as lubricants? Because in many of these markets, there's a ton of friction. So how you think about that? Are you providing products that generate lift, not just sort of, I'm talking about actual lift, changing the career trajectory, the business trajectory, the life trajectory of the people that you serve. And then the final thing is that in many markets, people are fragile. Consumers, businesses, they're very, very fragile. So what are the things that we need to be doing, and what are the things you're trying to do to make them more anti-fragile, right? So that they can actually become stronger even within chaos or even within disorder. And we've used those quadrants as sort of a way to filter the types of investments we want to make. And that's been incredibly useful and helpful for us.
Christine, can I jump in with one piece of practical advice on this? So you're going to get a lot of no's. You know, you pitch people like Agosa and me, like you're going to get a lot of no's. It's kind of a numbers game, especially at the early stage. The best piece of advice I can give is when you get a no, ask for more specific feedback about what might change that investor's mind. So, usually this occurs by email because investors hate to give no's verbally or in a meeting. So the investor will follow up by email. Oh, super excited for you, just not a good fit at this stage or whatever. At that point, instead of just saying, okay, thank you, say like, thanks so much for your time. I remember in our meeting you asked about, what type of feedback were we getting from the first couple enterprise sales customers that we had just brought on? What are the couple things that you might need to see down the road in order to change your mind about investing? And what you're trying to do is you're trying to get that investor to put in writing, ideally, like I want to see you get to 2 million of MRR. I want to see you get to 5 customers. I want to see you recruit, chief product officer, because that's a weakness on the executive team. Have them tell you like what is it that would get them to change their mind. I have at least a dozen companies in my portfolio that were a no and became a yes 6, 12, 18 months later. And once that investor puts in writing what it was, then you come back to them 6 months later and say, hey, guess what? I did what you set out, what you challenged me to do. And investors are looking for that track record of, you say something and you deliver, you say something and you deliver. One company, it was 2 years, more than 2 years, almost 3 years from that first pitch to when I finally invested. Based on that kind of track record of them hitting deliverables that I set out for them, even though I wasn't an investor.
Yeah, that's an excellent point. Excellent point. The no's never stop. The no's never stop. So you've got to build sort of the suit of armor necessary to flick them off. But I think what I would add to what Spencer just said was that not every investor's advice is actually worth taking. To be perfectly candid, some of it's just nonsense, right? And so you've got to sort of trust your gut that when you go back to an investor that said no, there was something about the interaction that you really appreciated. And you're like, look, I would like to really hear from you. Like, what do you think? And many investors don't have the time, and they'll send you some stuff, traditional sort of basic stuff like, oh, I want to sit this one out, and not a fit for, the classic one-liner, whatever it is. But an investor that you've truly connected with will actually take the time to give you the feedback. And what's really important is that you internalize the feedback. You don't have to take all of it, but you sort of say, look, what am I missing in this interaction? And what can I learn and the like? Because, a lot of entrepreneurs take the no's very personal. And, at the end of the day, investors don't scale. That's the problem right now that I think entrepreneurs don't see. There's only so many investments we can make on an annual basis. There's only so many investments we can sort of be managing on a full-time basis over an investment period. So, every incremental investment that an investor makes, takes one other investment away, right? So, recognizing that and making sure that, not just your entrepreneur product fit or entrepreneur market fit, but it's entrepreneur investor fit, right? That's also a very important thing.
Thank you for that addition. So I know we're running on time, so I just wanted to make sure that you guys had the opportunity to answer this final question. We already talked about your backgrounds, and this second question yielded a lot of great strategies for entrepreneurs because I see the chat feed is going wild. The last question we wanted to share for each of you, and starting with Spencer, are there any initiatives, programs, or activities that you're doing currently right now to support entrepreneurs get access either to your capital fund or just in general to be more successful in raising capital? Spencer, starting with you.
I mean, they're not formal programs, but I mean, I view that one of the services that I provide as an early stage investor is helping these companies raise money down the road. So, almost every day I'm sitting with a seed or a Series A portfolio company and strategizing with them about how to raise the B, how to raise the C, who are good investors that would be a good fit, which introductions can I make? I mean, that's a huge part of the value that early stage investors provide. So it's not formalized, but that's basically my job.
And any final quick remarks before I pass it over to Egosa that you like to share? Because there were a lot of great insights from you, Spencer.
Thank you for having me. I talk about a lot of these themes. I write about them on my LinkedIn blog and elsewhere and on social media. So, and my podcast actually explores a lot of these. I have a podcast called Office Hours, where I interview other founders and CEOs about a lot of these similar topics about scaling and fundraising and DEI and other topics of interest to me. So check out my podcast if you're interested. Thank you.
Thank you. Egosa, over to you. Same question.
Oh, great. Yeah. So we do office hours. So I think a few things. One is that we are very, very, very serious about not requiring warm introductions, right? So, I think that's one important thing that most entrepreneurs really struggle with, right? Because people say, take, for instance, just say, you can find someone who knows me through LinkedIn or whatever it is. And, and that's great. We have quite a few companies in our portfolio that came in through the website, right? And, if you take the time to put in the information we need from you so we can evaluate what you're doing, we'll take a really serious look at that. So that's, it's not a program, but it's an open door. The second thing that we do is we do office hours, like physical office hours. And that's also, I think, an important thing. Then the one thing we started doing sort of with last year was having sort of, clubhouse discussions. And we've become, I think, a little bit more open. So for instance, the last one we did was on our investment strategy in InsurTech. Right. And so we're probably going to do those types of conversations where people are sort of welcome. We'll show you what our internal workings, so to speak. And then hear from entrepreneurs who are working in those spaces. But, accessibility, I think, is a very important aspect of what we do. And we'll continue to do that as best as we can.
Well, we'll see. Well, again, thank you so much for joining us at the Global Investment Summit and giving your insights. Obviously, you see the chat feed is going wild, so we will be sharing your LinkedIn information so people can follow you on LinkedIn. And Spencer, thank you for sharing your podcast. We'll share information about that as well. It was a pleasure to have both of you with us today. Thank you so much.
Thank you.
This was amazing. Thank you.
All right. There you have it, ladies and gentlemen. This was perhaps probably one of the most engaging panels we've had. I know there was a lot of feedback on the content. Hopefully you guys enjoy it. Of course, we'll share their LinkedIn profiles for you to be able to connect with them after this program. It truly was amazing to have them join us today. So with that, ladies and gentlemen, as we come to a close, I do want to again thank everyone for their support. This now concludes the GSC 2021 virtual edition of the Global Investment Series. We're so excited and thankful to all of our partners who made this happen. As you can imagine, over 33 speakers was able to join us for this entire series this year, really just empowering entrepreneurs around the investment landscape and how to make an impact with all these thought leaders and influencers. And today, obviously, there was a journey again to this point. 2020, last year, when we launched this series, we had the Global Investor Summit 2020 edition around accelerating people into the digital age. This year, we did a 3-part series where we talked about crowdfunding, crowd equity, and just really thinking about investment careers and how to really understand the investment ecosystem. And I'm so excited to share that we'll be back again for the 3rd annual edition on April 2022. And of course, it will always be free and accessible to our community. We're excited that over 15,000 people registered to be a part of this entire series. So many of you who registered will receive summary recap of what was shared, not only today, but the entire series of the GSC Global Investment Summit. And of course, we want to again shout out the global startup ecosystem was powered not only this summit program, but many other programs around the world. We hope that you enjoyed this experience of being a part of this edition of the GSE Global Investment Summit. And without further ado, definitely stay in touch with us. We definitely have more program in store with you. And as a reminder, we are currently capital raising. Just go on globalstartupecosystem.com/invest. We just launched our capital raise, and we're doing a small seed round from our ecosystem. And we're really excited because we bootstrapped to this point. And so we're excited to welcome our community to also become investors. So without further ado, thank you so much for joining us for this edition. We'll end with the final recap clip of the Global Investment Summit. And we'll see you right here at same time, same place next year for the third edition of the Global Investment Summit. Thank you so much for being a part of the GSE journey.
I was able to engage with a larger pool of investors, oftentimes had more access to decision makers because there just was that ability to be able to meet.
Our vision is a holistic one based on the belief that the strength and competitiveness of our economy ultimately depends on giving everyone the opportunity to participate and contribute. Let's not leave anyone on the sidelines.
StartEngine is one of the leading equity crowdfunding platforms in the industry.
So there's another about $3.5 billion that essentially needs to come from the private sector, and a lot of that will come from entrepreneurs like the audience in this meeting. So there's that one big issue, demand issue.
Equity, as you all know, is dilutive, and it's at a valuation which is at today's valuation, which might be low for a company that's very early stage. And so if there's a way of avoiding the dilution of equity, that's always desirable.
So most of our startups that are raising from VC are also raising on Republic. And I think that's the incredible part of it, is that you can be raising from two different sources at the same time.